Good Thursday afternoon to everybody, and welcome to FreightWaves Midday Market Update. This is our twice weekly interactive show, so get your comments and questions in on Facebook and FreightWaves LinkedIn, and we'll try and get them answered and addressed as best that we possibly can. We got a great show today. Kevin Hill is not with me today. I'm joined by our Director of Freight Market Intelligence, Zach Strickland. Welcome to the show, Zach. Thank you for standing in.
Hello, Mike. Good to be here.
Yeah, it's a great Thursday, isn't it?
It is. It is a wonderful Thursday.
And we've got a great show, too. We've got some really good updates for everybody. Andrew Cox is not here, so Zach and I will go through the news headlines, but we do have Anthony Smith coming up. And what has he got today? He's got GDP, right?
Yeah, we had a huge GDP release, so I think that's going to be interesting to hear him talk about as people are, trying to figure out what to make of the second quarter.
Yeah, exactly. And looking into the third quarter is
yeah, right.
And third and fourth and what's going on. Of course, if we knew exactly what was going on there, we wouldn't be on TV. We'd be in the Bahamas or somewhere by a pool. But we also have Jared Flinn, who's the operating partner at bulkloads.com. He's going to be giving us an update on bulk freight commodity and some updates on what they're doing there as far as tech space in the bulk freight market. And we also have Hey Boomer, Steve Ferreira, CEO at Ocean Audit, is going to come in and give us an update on what he sees going on in ocean freight and maritime. So quite a lot to cover today.
Yeah, and we're also going to talk about, you're not going to miss out on me, right?
No. What are we going to talk about?
We're going to talk about
the market?
Yeah.
The freight market with Zach. Yeah, we're going to do that at the desk today. So a little bit different format today. We have a couple people out on assignment, I guess, if you want to call it that. And let's jump into it. So let's get into the headlines here first. So ELD risks, the ELD risk gets new scrutiny after FBI warning. So the introduction of electronic logging devices brought a new worry to fleets and truck drivers. It's called hacking. Zach, have you heard of this thing called hacking? The connected devices, it was said, could provide access to hackers. Now, the FBI has warned the industry about such a scenario. But really, should we be concerned is what we're talking about here, Zach.
Yeah, and I think they had the CEO of Omnitrax got on, or Chief Information Security Officer at Omnitrax, I'm sorry.
Right.
Sharon Reynolds talked about this. She said there are no current ELD hacks that we are aware of. So again, that's a pretty good, Omnitrax, obviously one of the largest ELD suppliers out there.
Yeah.
If not the largest. And the fact is that there hasn't been some sort of large-scale attack on ELDs, but they're basically saying, hey, watch out, because this could be very disruptive. And they talked about how it was, there's different levels of, disruption that could occur from this if some hacker were to get into, say, a smaller fleet or a small owner.
Yeah, versus a larger. Absolutely. It could not only for that fleet, for really, if you hacked into somebody who had the majority of larger carriers, et cetera, you could disrupt parts of the economy pretty well, couldn't you?
Yeah. And again, I don't think they don't really specifically state how that disruption may occur.
Yeah, it was more just a warning that, hey, it's possible. And I think really the first warning came out, when the FMCSA said that the minimal, they put in minimal protocols for security at the onset for the the parameters or the guidelines for development of ELDs, citing that there would be a market for more security later. Hint, hint, wink, wink, nudge, nudge, say no more, right?
Right, and that kind of harkens to the concept of how much does the government have, involvement in this. If they're going to put out a mandate, what is their responsibility to providing, certain protocols and operating procedures on how to develop this stuff? And I don't know if I have a good answer on that myself, but it is one that they're obviously having to deal with in hindsight.
It's a good point. It's a good point when you talk about regulations. We were talking about regulations and pricing and so on and so forth earlier in the pandemic and earlier this year with brokers and carriers, et cetera. It's one of those things is, okay, there's minimal here, so you can go develop these things, but be aware that you really probably should have more security, or should they come out with, hey, you got to have all this incredible security, which keeps out barrier to entry type of thing. So, which one do you want? And the other thing, when you were talking about the larger carriers versus the smaller carriers, the other concern of that is that really the larger carriers will have the ability or the wherewithal to develop and put in these security measures. The smaller 1 to 5 fleet trucks, which is the majority of companies, don't have that kind of extra cash to say, hey, and worry about this, right?
Yeah, 97% of the industry having 20 or fewer trucks. Obviously being the more vulnerable sector of this, you know, because they could get disrupted a lot more. And again, they don't have the resources or the IT infrastructure to develop these security protocols that are necessary. Again, there's an argument for both here because, are you going to make this so cost prohibitive for the smaller carriers by developing something with a lot of protocols on it? Or do you put the burden on them, you know what I'm saying, to make their own decision?
The ALD manufacturer, or you make the ALD manufacturers just put it out there without extra cost or something?
Yeah, exactly. So they have like a minimum viable product. So that I understand that why they wouldn't want to put some sort of increased protocols in there to keep costs at a minimum because they're already going to get, they already had pushback from the smaller fleets on the cost of the ELD in general. But again, it's there's always something.
Right. Okay. Well, I think that horse is dead for right now. So let's move on to the next headline. I'll run with it, I guess. Carriers owed thousands after lumber processor files for bankruptcy. So several trucking companies and freight brokers are owed thousands of dollars after Kentucky-based lumber processor filed for Chapter 11 bankruptcy protection on Monday. Northland Corp headquarters in LaGrange, Kentucky, filed its petition in the U.S. Bankruptcy Court for Western District of Kentucky. Its filing, in its filing, it lists liabilities as between $1 million and $10 million and states it has up to 199 creditors. So that's a wide range, 1 to 10 million.
1 to 10 million. It's funny to me that they never have a full specific detail.
It's somewhere in the $0 to $10 million range. I'm not sure.
But obviously this is any time that a company like this goes under, and they're paying for their transportation. That means that subsequently you have carriers out there that are owed a lot of money, and again, carriers not exactly cash heavy. So anytime that one of these goes under, you're talking about a lack of receivables that dramatically impacts a lot of these balance sheets.
You've got some of these people. They only list a few here. You talk, and I won't mention names, I guess, but because I don't know that it's right. It's in the article. You can read the article, but some are 49,000, 57,000, et cetera, that type of thing. Some of them named that are owed some of these money are C.H. Robinson, Total TQL. 50 grand's not going to,
that's not going to hurt
a blip
them
on a radar, but it could potentially hit, Billy Joe Bob flatbed lumber company.
And you're talking about flatbed. Majority of this is flatbed. Lumber is flatbed in general. And these are typically your smaller carriers. They don't have a huge fleet size. So again, you've got a lot of disparate sized carriers that are hauling this freight. And of course, any of them losing an account is going to be pretty detrimental.
Yeah, absolutely. That's why there's factoring companies, right?
Mm-hmm. Yeah. And I think one of the interesting things here is that, down in the article, it talks about how the lumber industry has been scrambling to recover financially since China placed retaliatory tariffs of up to 25% on lumber imports a year ago. So we're still seeing some of these impacts of the trade war,
right?
And things kind of playing out, resulting from something that happened over a year ago. They cited that there was a little bit of, recovery, or they pulled back on some of those tariffs for lumber.
Yeah, they excluded a few different types of lumber, I guess it was, but I guess not enough.
Yeah, but obviously what's done is done. What happened, you can't really recover from it. And again, we don't know if those lumber products are necessarily, going to China.
Yeah, and thinking back through all the freight flow and the economic numbers and the housing starts, et cetera, that type of stuff through COVID, I wouldn't think that was the cause, right?
You would never expect it, right now, because the housing sector has been really strong throughout this. You did see some sort of declines, and we can ask Anthony about that. But to see a lumber producer fall off.
Yeah, lumber's not something that's warehoused in great quantities, is it? It's pretty much from them, is it?
Yeah, especially some of that pressurized wood. But
okay, I got you.
And I'm assuming that the lumber that we're exporting to China is going to be a lot more of that longer shelf life type.
Yeah, I would think so.
As well. And again, goes to the point that we don't know how much our economy does interact with China on the export side, just as well. We talk about them on the imports all the time, but the exports hitting the freight market. In this example here.
You can see all the time imports, how they affect freight markets, et cetera. And this is a freight market, a carrier, and et cetera, that type of stuff. So, All right, let's move on here. So a jury awards $8 million to a trucker who was run over by a forklift. Zach, you want to lead off with this one, or would you like me to keep going while you fix your collar?
My collar here. So, this is pretty straightforward. It's a pretty, unfortunate circumstance where a truck driver out in California, he was trying to show a forklift operator how to load his truck, with the appropriate freight. It was a produce hauler, and he was basically walking in and saying, "Hey, I want you to load my truck this way." The forklift operator, clips him on his foot, basically smashes his foot, and they have to amputate it. So
yeah, right, yeah.
So basically, you're talking about they amputate the foot, then they have to go back in and amputate the leg below the knee, and he gets $8 million. That was lowered from an original of $10.5 million as they found, Mr. Singh to be 25% at fault because he should have been He should have been more aware of his surroundings, what they were stating. But still, he gets $8 million. But again, you can't understate that this guy's livelihood, with truck driving, he can no longer operate a vehicle.
Right. He's a driver dispatch now at a smaller company, I think.
He's dispatching. Obviously his quality of life has now declined. He was an immigrant from India. Just recently, he'd only been on the job for 5 months, but they did state that they've been trying to push for a lot more stringent safety measures around these docks because you're talking about. You and I have been on a dock before.
Oh, yeah.
Those are scary places.
Yeah, a couple come to mind.
Yeah.
And we've taken customers out, and we, in our previous life, our dock, we had it clearly marked. You couldn't go past these areas, and if you did, you had to be escorted, and you had to be wearing safety goggles, and you had to be wearing the safety vests, and you had to stay within these certain walkways that were outlined that everybody knew about. And even then, those customers were very kind of freaked out, right?
Yeah.
Because these guys are moving, man. I mean, a good forklift operator, I've always contended, could probably feed you with his forklift. They're that good. And they're not worried about people around them because they're usually in a secure place and they know there's not these anomalous events. And when you get in this situation, they're going to react impulsively, and you've got to be careful.
Yeah, and they were even talking about in here about how they did not have visible lines or anything taped off to show where people can stand and walk.
That's surprising. OSHA was never in there. I mean, that's been a rule for a long, long time.
Yeah, that's just a lesson for people that are in this space, that are on docks and stuff. Never take those safety precautions too lightly. Yeah. When you are on a dock, you definitely need to be aware because this is, he got $8 million, but is it? I mean, he lost his leg.
Exactly. Yeah. Now I was on a roadway break bulk dock when we brought in electric forklifts. We switched over in one day and then took down the drag line. It used to be this drag line that moved around. It was quite noisy. It moved carton freight around the dock. We shut them both down on the same night. And when we shut them down, productivity went to like zero because there was no noise. And the danger was unbelievable. Running around there in my industrial engineering days, running around there with a stopwatch and watching and making sure and looking at productivity and watching that type of stuff. It was really quite concerning walking around that dock because normally you could hear when one was coming up behind you. Not so. You didn't know what was going on. So we had to put fake noise on them. But anyways, let's move on to air freight. Rickenbacker Airport in Columbus, Ohio sets cargo records in June. And we had Brian Schreiber on the show last week talking about this. So the Rickenbacker International Airport, a cargo-dedicated facility near Columbus, Ohio, set an all-time monthly record with 20.3 million pounds of international inbound cargo handled in June, eclipsing the previous mark of 4 million pounds by 4 million pounds, with the help of passenger freights never operated before the COVID crisis. The Columbus Regional Airport Authority said it also broke a record for international freighter arrivals with 120 in November 2018. Rickenbacker received 109 international all-cargo aircraft that offloaded 16 million pounds of cargo that was their previous record. So it's an interesting story, but it's also interesting as to why this is happening.
Yeah, we saw the spike in air freight rates back in April and May.
Yeah.
Setting all-time record highs as obviously a lot of the passenger flights came offline, reducing capacity significantly. Rickenbacker, of course, is more of a cargo-centric airport, specifically designed to handle air freight and offloading some of these cargo jets and stuff. And airport officials attributed the hike in business almost entirely to charter operators transporting personal protective equipment and other COVID-related supplies for regional distribution. So there's the key right there is all the medical supplies and protective gear that these people are importing from China obviously needed an expedited handling on it. They can't just sit around and wait on things to cross the ocean.
Absolutely.
Capacity's coming offline, especially on some of those passenger flights. The air cargo, obviously a good solution for that, and they reap the benefit.
And that point is interesting with the PPEs and the urgency and so on, because we had been hearing report and we've been talking to others in the air freight on different shows in the air freight industry, showing that there was less of that actually moving on air freight and moving more towards the ocean side because the stockpiles had been built up and so on. But now with these recent outbreaks, et cetera, I guess that trend is starting to change a little bit. We're starting to rethink, hey, wait a minute, we do need masks, right? We need to move these things. So that's one of them. The other one, like you said, those smaller regional air cargo airports like Rickenbacker, and I think we have a few more listed here, maybe not, but these smaller ones are boosting, while the larger ones like your O'Hare, et cetera, Atlanta, are shrinking in volume because of the ability to handle this non-efficient type of cargo.
Yeah, I mean, the O'Hare and everybody, they're all set up to handle passengers, not necessarily the air cargo as much, and so when you're streamlining your process, obviously the cargo-specific airport is going to be a lot more streamlined and have more of the equipment and personnel available to dedicate to offloading freight versus your more commercial airport where you're talking about a lot of people and transporting those through the airport efficiently.
Yeah, so it's interesting where this freight is growing and
Columbus, one of the largest freight markets in the United States.
Oh yeah,
so
it's huge. It's a massive
distribution center. It's a massive distribution area. You obviously have worked in it significantly over your career.
Yes.
But yeah, Columbus is almost the perfect distribution point for that, hitting that Northeast corridor and also the Midwest.
Oh yeah, absolutely. Yeah. You're, I don't know, 500 miles within 70% of the population, something ridiculous statistic like that.
Yeah, right.
So here's one that's right up your alley on, Freightonomics, et cetera. You want to take this one?
Yeah, I love this one.
All right, let's roll.
This is fascinating to me, just to continue to see, earnings reports like this. So UPS blows away estimates with stunning second quarter results. EPS of $2.13 per share doubles median estimates while volumes surge more than 20%. UPS reported second quarter results before the market opened on July 30th that exceeded analyst estimates by a wide margin, obviously. And I won't get into all the stats here. You can see they blew up their earnings. UPS is fascinating to me in the way that it is not a traditional, we're not talking about traditional truckload, but we are talking about freight movement. They are primarily parcel and LTL provider. And the LTL segment in here, they stated, did not have as good of a...
Yeah, that's what I was going to ask you, is which segments did they...
Yeah, I mean, and a lot of this came from, international freight volumes, and you're talking about... some of this B2C. They've been transferring a lot of their energy into this B2C. I mean, think about it. When we shut down, Amazon packages started flowing across the country with more volume.
Amazon Prime was now 2 months instead of 2 days. Right?
It makes too much sense in hindsight that UPS would have a really strong second quarter. They're not necessarily as exposed to the truckload sector like some of these other carriers are. LTL, obviously, they do have a strong exposure there, but as a percentage of their overall revenue and volume, LTL is minimal. I mean, it's almost nothing. So
makes sense.
So again, even though they did cite that LTL did experience a little bit of turbulence, their B2C was out of control. They're talking about domestic volumes being up 20%, and operating margins were up 9%. So they also increased their profit, as well as volume.
Nice job.
Yeah. So yeah, UPS doing well.
So what do they think's going on in the third quarter and fourth? Did they provide guidance?
They did not provide guidance, which has been the story of this quarter, earnings season this quarter. And I think that's a wise decision. I don't think anybody is, but I think that they can still be pretty. I think more than most carriers out there, I believe that these guys can probably be a little bit more, solid in their backing, considering that we're still seeing this lifestyle persist in terms of package delivery,
and that's not going to change. No. I mean, it has like many things that particular change, which we were going to anyways, was sped up, and it's more solidified. Should we jump into a little bit of Sonar Market update today and see what's going on? I can pull up a screen here.
Yeah. Let's talk about our tender volume. So
okay, let me do this, and I'm going to hit F11 so the production people know that.
Yeah. I'll go ahead and talk while
There we
you're
go.
doing that. So
I'm ready. You can show the screen here to our audience, and we can talk through this. I've got OTVI set up in year over year for 2 years.
Yeah, so we had another record day yesterday, all-time record on the OTVI. Again, it's very surprising to continue to see the expansion of the freight market like we're seeing. Volumes, 25 to 30% higher than previous years, and even that 2018. Now, don't get too excited about 2018. Everybody tends to say, well, 2018 was an anomaly. Well, 2020 has rewritten the history on anomalies.
Oh, gosh. Yes, it has.
And 2018 in July was not actually that strong.
It really was. And the third and fourth quarters were dropping. I mean,
we were already moving out of it. It was really more about late 2017, early 2018. That was really the booming sector of the economy. But still, looking at freight volumes continuing to expand throughout July, towards the end of July. Normally, July is a very soft month, more vacations.
Well, just normally that normal summer slump.
Summer slump is normal, and it's because it's the second most vacation time of year.
Yeah.
You see, it's also the beginning of a quarter, so you see a lot of activity ending a quarter traditionally, end of month, a lot of quotas, but then you have people taking vacations. Well, vacations were not as prevalent this year.
No, they weren't.
You had a lot of outbreaks starting to come on in the mid-July. We had this second resurgence of COVID and stuff like that. So we're talking about people that didn't take vacations. They're also still having this adapting, supply chain adaptability. We're seeing surging demand and, a lot of still warehouse repositioning.
Right.
We talked about LMI on Freightonomics one day about, when you see inventory levels rising alongside of transportation capacity contracting, that's a sign of intra-warehouse movements because you're not getting enough demand of pulling down those inventory levels.
Right.
You just think about it. You're pulling inventories into other warehouses.
You're repositioning.
And a lot of that continues to happen now. But there is, we talked about this the other day. Normally when you see some of that repositioning, it's kind of specific to a length of haul.
Okay.
Right now we're looking at lengths of haul through just about all mode, like all lengths of haul. So anything over 450 miles is expanding as well as long haul, but we're also seeing some of these short haul volumes, these less than 250 mile moves expanding as well, and specifically on both ends of the country.
Right.
So we've got outbound tender volumes increasing in Harrisburg, Pennsylvania, dramatically, as well as in Los Angeles, California, dramatically. So we've kind of bookended the country as volumes continue to grow on both sides of the country, and capacity, outbound tender rejection rates, getting closer and closer to where they were in March at about 19.25%. We're right about 19.18% on that tender rejection index for the nation.
It's like you know this information.
I do look at it daily.
I got you.
I think the big story here is the fact that we continue to see volumes grow, which is only going to keep that capacity tight longer. So I think that this August is looking, the longer that volumes grow, and especially at the rate that they're growing, this is more like an incremental growth rate versus that March where you saw this, 5 to 10% daily jump in volumes. Obviously capacity didn't have a time to react. This is more about a longer sustained freight volume increase.
Yeah, it really is.
And that's a lot more like what we saw in 2017.
So the slope is much less steep.
Yeah, it's much less steep.
And the longer that goes, the more strength you get behind it, right? Let me take you down another path here before we bring on Anthony Smith, our lead economist. I hear he's getting ready in a remote studio here. So maritime, if you can bring this up on here. So I'm looking at this maritime, and you know why I'm bringing this up, because it's very interesting. And if we look right here, we've seen, and you can see these peaks and valleys, right? The blue. And then you have 19 in orange and 18 in green.
Right.
So we're looking at blue, and you see these peaks and valleys that are going on right here. But there's a definite trend up, and you can see I've got the average right here, right? So there is this trend up. So that would indicate that we're looking pretty good, right?
But these are
with imports.
Yes, these are
hitting the ports and then hitting the warehouses, the transload docks, the local, the long haul, the rail.
So right now we're talking about imports being very strong. We actually finally, year over year, started to show,
Right.
some sort of positive growth year over year on the imports as they finally recover overall in the United States. I believe the West Coast has actually been a little bit more active,
Right.
and actually jumped over 2019 levels here in the last couple of weeks. But East Coast has been a lot more lagging in that activity just recently. But looking forward.
Well, that's what I was going to say. This is customs data, right? So this is happening like now.
Right now.
But we've 7.0, Sonar 7.0 brought in this ocean shipment dashboard. So let's look at this and let's talk to this for a minute or two, right?
Yeah, and kudos to Henry Byers and John Ellis
for
amen. Putting this together.
Yeah, good stuff.
This is really good stuff.
So here's our ocean dashboard, right? So this is not customs. These are bookings. So this is stuff that's not even it's not even stuffed into a container yet.
No, this is the orders that a lot of these shippers are placing for future, departure dates. So it's based on estimated time of departures.
Right.
And we have it divided into shipments and TEUs.
Which is, So you have shipments on the top here under, if you look under this trade company here, you got 9.6K down 19.4. Those are shipments. So a shipment could be part of a TEU or it could be 100 TEUs.
Correct.
20-foot equivalents containers, right?
Yep. Yeah, when you're looking at LTL or something like that, obviously we looked at weight per shipment. Mm-hmm. It's hard to tell exactly. Not all shipments are created equal,
right?
And so that's why we have it broken down into TEUs, which
and then on the bottom here is the actual TEU volume, so which is an index.
And this is fascinating to me. This is a good thing to look at because we're talking about larger than average shipments also coming across the water. So they're booking. We're seeing the future shipments going down year over year.
Yes.
And so there's a warning sign there for any freight operator in the United States right now.
Yeah.
That's what that ocean shipments index is indicating, a negative 19.4% year over year decline.
And so I have this clicked
overall,
I have this clicked on imports. So this is all trade countries of the United States to all U.S. ports and all carriers. Now I could select, we want to select Los Angeles. So all countries into Los Angeles, and it paints a very similar picture. But you can go into these, right?
Yeah. Well, Los Angeles looks like it's actually going to be outperforming year over year.
Yeah, it does, but the trend doesn't look great.
No, the trend, it's starting to come a little bit more in line. We're starting to see less booking activity, obviously. But again, the fact that we're seeing this, when they were booking freight, the shipments were larger by nature as they were trying to get in front of things. You can almost, if you look back on this, it's kind of easy to understand why some of these shippers would say, we want to take advantage of this limited capacity and book as large of an order as we possibly can. So that's going to cram a lot more freight into these containers. They're talking about 40-foot containers primarily being utilized right now. We're not even seeing 20s go across the water.
That's just 2 TEUs.
Yeah. Well, yeah.
If I did the math right.
Right, yes. It's
crunch those numbers.
40 is 2 TEUs.
Yeah.
But again, the fact that we're starting to see this slow down is kind of a bellwether for, potentially slowing activity.
Right. Mm-hmm. Right. Well, excellent. Thank you for that, Zach. And so with that, I think Anthony Smith is ready. Anthony, what have you got for us? I think we had a GDP results we want to go through today.
That's right, Vincent. So today we got updates for the second quarter 2020 GDP numbers, and we saw just as much as we expected. Last episode of the Midday Market update, a record decline for the quarter. So it contracted by 32.9%. That's the initial headline number, and much in line with what we were expecting to see for the second quarter of 2020. Of course, a lot of that's going to come down to the April results where the economy just came to a complete halt, but within it, there were contractions really throughout. I mean, when we're looking at the report, consumer spending was down 34.6% for the quarter. And as we know, consumer spending, personal consumption expenditures, the major engine of the U.S. economy. And so that's a significant hit. The other thing that we have to keep in mind when we're looking at consumer expenditures and we're looking at consumer spending within GDP is that it's broken into two components. And so we have the goods sector and we have the services side. And one of the things that we also like to note every time we kind of come across this time of the year or quarter, with GDP results is that it's not always the best barometer for freight and transportation, just because so much of that is going to be tied up in services. And so as we're seeing these record decline for the GDP, we're also seeing, as Zach mentioned earlier, that substantial rise in outbound tender volumes. And we've seen capacity tighten up throughout the year via SONAR data. And so when we're looking at the overall GDP, this is, again, a record low. The previous low that we've seen recorded was a 10% decline, and that's going back since around World War II, since we've been tracking this kind of data. And it's really been, again, a decline across the board. One of the areas that we also mentioned last week, and I think we've talked about it often, is that business investment was down quite a bit. And when we see investment on equipment, that's down by 37.7%. And one of the areas that was kind of a bit of a mixed bag, of course, was government spending. I think a lot of people expected with the federal relief aid packages that really bolstered results there. But again, with a substantial decline in employment, we saw that there was drops in tax tax money coming into state and local governments as well.
So effectively, Anthony, I mean, it's fascinating to me to see this kind of disconnection, as you mentioned, played out here between the GDP and the overall freight market. We've watched volumes increase significantly. One of my questions is how. When does this start to play out in the freight market? When do we need to get a little concerned about some of these macroeconomic figures? Looking into the third quarter, do we even see it? Like you said, there's so much services information in here. Do you think that the goods economy, the goods sector, is going to recover fast enough to where we have a decent third quarter result?
I think when we're looking at this, it's already kind of playing out in the freight market real time. It's just that we can't use these exact numbers as a one-to-one comparison. When we're looking at this, we probably need to start looking at the freight adjusted or goods adjusted GDP when we're looking at these macro-related numbers. And I think we're looking at the third quarter, we are expecting, or at least I think the general consensus is that there will be a substantial rise in the third quarter and in the second half of the year. Of course, just by a general comparison of hitting a record low, I think it's not out of the ordinary to expect a growth rate of anywhere from 10 to 15% in the third quarter, double-digit growth. I think we're looking at the third quarter and the second half of the year overall. The course of the virus is really going to dictate what's going to happen overall. It's going to dictate the pace of recovery. It's going to dictate how fast certain industries can recover. And it's also going to dictate what's being hauled throughout the country overall. And I think that's really going to be the course that the country is going to have to take and really rely on the pace of recovery from the pandemic standpoint.
Excellent. Thank you, Anthony. Now, we're running a little bit behind, and we've got our next guest sitting here. But really quickly, can you give us an update on unemployment benefits progress?
Definitely. So the latest numbers for unemployment show that there was a consecutive second week increase for numbers. So we saw 1.43 million, I believe, was the latest number for the most recent week. And this is indeed the last week of the additional benefits for those that are unemployed and file for benefits. So as of now, there hasn't been a concise or an agreed upon bonus or benefits package set up. That's going to be, I think, one of the areas to watch in the coming days to see if there can be a consensus reached. I think there's likely going to be one reached. It might not match exactly what we've had in the past. It might be slightly reduced, maybe matching up to 70%. But that, as of now, is the latest for the unemployment benefits. Second back-to-back week of increases, and not quite a consensus reached just yet by Congress for those added benefits yet.
Excellent. Thank you so much, Anthony. Yeah. So
that's, I mean,
what do you say?
Yeah, those macroeconomic figures, they're scary to hear, but I mean, there does seem to be some level of disconnection.
Yeah, there is. There definitely is. So I mean, it's one of those things, kind of postmortem, something like that. Easy for me to say. But hey, right now we're joined by Jared Flinn, who is operating partner at breakbulks.com. We're going to talk a little bit about the break bulk or the bulk freight, bulk loads.
Bulkloads.com.
market, see what's going on there and what's new at bulkloads.com. So, hey, Jared, thanks for coming on the show, my friend. How are you today?
Good. Thanks for having me back.
Yeah, absolutely. Always good. I believe you know Zach Strickland, who is my partner in crime today on the show.
Hey, Jared, long time no talk, man.
Yeah, absolutely. You got has Kevin got the day off?
Yeah, he doesn't. He's been redistributed today.
Yes. He's on assignment.
Yeah.
Nice.
So anyway, hey, Jared, can you talk a little bit about what's going on in your world and in bulk freight, kind of what you're seeing, and as we're seeing, truckload go through the roof. We're seeing changes in air cargo. Rickenbacker Airport just had a record month. Imports seem to be up a little bit. We do have some decent economic news in the Fed release, et cetera. So what's going on in the bulk area?
It's interesting. It's just a steady pace, through this. I was on last time we were talking even through the pandemic. Bulk commodities have just stayed the same. There hasn't been really a blip. And, a lot of our factors are more, a little more market driven, but even climate related, whether we're facing a drought or like last year, if you remember, we had increase in flooding. So we don't have that this year. And right now, especially when you focus on the ag sector, we're shaping up to have another record crop. And you got to think last year, especially in the Midwest, there was a lot of acres that were flooded out. Farmers, they didn't replant, didn't have time. So these farmers, they've doubled down and they're talking that we're going to have another probably one of the best crops ever here in the Midwest. We've just had good moisture at the right time, good heat, climate. So we're shaping up for a good crop, which means freight's going to be at all high demands when it comes to trucking in our sector.
So you guys haven't seen any, how's capacity shaping up on the bulk side? I mean, you're obviously seeing, pretty consistent, stable, very different story in the some of the other modes of the freight market. But you're saying that capacity in the bulk load market has been relatively normal or seasonal, would you say?
Yeah, over the years, we get the ups and downs. We'll have guys that they'll exit the bulk market, and we talked about this, Michael, last time, that sometimes when bulk freight's low, you'll get a shift or a migration over to the van reefer sector because these guys, they can just switch over. Right. We haven't seen that this year. These guys, the demand's been good. Rates have stayed steady. They haven't been crazy. There hasn't been like a big push to really get them climbing. But a lot of the guys that we talk to, I mean, it's, no news is good news in our market, and we just haven't heard a lot of negative feedback as far as rates. So I think, right now you're seeing, we just got done with wheat harvest. Now we're getting your Texas Milo harvest coming up. We're going to get fall harvest starting up in the South and moving north. And I think it's gonna be a good one, especially for on the freight side of things.
Nice. I was going to ask you what you saw in the short term and near term, but. Yeah. You answered it, so I could ask you again, but that would be boring.
Yeah, what are some of the more? You were talking about some of the crops out there. Is there anything outside of ag that you're seeing that's been impacted?
Yeah, the only other on a negative side, because we deal with all bulk commodities, so we probably tend to focus a little more on the ag, but on the industrial and even industrial liquid side, we've seen that really flatten out. We mentioned before in the ag, we do a lot with the ethanol plants. Ethanol production is maybe 70% of what it was, which is that's just a lot of capacity that gets thrown out of the market there. We have several larger brokerages that use our firm, and talking with them, it's been just really slow on the liquid side. However, on the bulk industrial side, dry bulk, we've seen a big increase. And when I say that, I'm talking more on pneumatic type freight, dump freight. That has actually had a huge uptick. I'd say almost maybe 20-30%. And a lot of that just stems, a lot of these factories that were shut down or businesses, they're back up and rolling at full capacity. So you got just that bottleneck that happened. So we're seeing really positive news with freight demand on that side.
Yeah, we were looking at some of that type of information on the industrial sector recovering here just recently. That's good to hear.
Yeah. That's very good to hear. Yeah, very good to hear. So let's switch gears a little bit, Jared. I'd like to talk about tech in the bulk freight. Right. Yep. So what is we don't talk about it that much in bulk freight, about the technology advancements, et cetera, and what's going on there. So what is that environment like, and where is bulkloads.com fitting into that?
Yeah, no, I'm glad you asked. Just like in the other sectors, man, digitizing freight has been pushed very hard, and especially towards us. We've had right when the pandemic started, we had a lot of customers kind of reach out to us asking how can we digitize more of these transactions. How can we get a truck to come in and communicate with that trucker without any face or any interaction. Ironically, we were already on the cusp of a lot of this technology. It just made us push it that much forward. We've implemented full document scanning. Probably the biggest thing that we've kind of had in the pipeline. It's soon to release, but we're actually creating a bulk TMS. So it's a TMS system specifically for the bulk industry. And obviously, there's a bunch out there, but we're the only ones that are focusing just on bulk commodities, which is a lot different. People don't realize you're not dealing with it's all weight based, bushel based, and all that. And we've listened to a lot of our clients, especially in the ag space, just to understand how that communication is done. So we're creating a full platform where a lot of these, it can be done by the shipping company direct. So any kind of big grain, agri company, it can be done by freight brokers or even just full dispatch companies where they can actually manage all their freight into one aspect, but a lot of digital aspects. So we'll have a full document scanning platform where they can send all their documents in, but they can actually dispatch and offer out loads, basically, and capture that whole load life cycle into one platform. And we're really, really excited. We were hoping to have it out sooner than later, but we're getting really close, and we've got a lot of positive feedback so far.
Yeah, that's excellent stuff. I mean, transparency in the bulk has been a difficult thing for quite some time, and this will definitely provide some of that stuff. We used to joke we could figure out Christmas tree season not by the number of Christmas tree shipments, but because there was no capacity.
Right.
Right.
Yeah, what's interesting, I'll just kind of add to this, like one thing, a lot of because we deal with a lot of commodity traders. So a lot of these traders, they're buying a commodity out of one location and maybe not their location, some other company, and then even selling it to another location. And until that trader actually receives those freight bills, they can't actually execute on invoicing that client or even paying the trucker. So just streamlining that process so much quicker is what we're really trying to focus on. So we're trying to just get that into one capsule. So when that truck delivers, documents get flowed up, transactions made, payments made to the trucker.
Excellent stuff. Thank you very much, Jared. So where do people go to learn more about bulkloads.com? Is it bulkloads.com?
Yeah, so there's two different actually websites. Yeah, you can go to just bulkloads.com. That's our load board. That's the parent company. If you want to learn more about just the TMS itself, we have another URL website. It's just bulktms.com, and it's more of just an informational site to how that'll work. When this is live and released, it'll be fully integrated with the Bulkloads platform, so there'll be a seamless interface for users.
Excellent stuff. Thank you so much, Jared. You have a great day.
Hey, thanks for having me on.
Right on. We'll talk again soon. Interesting stuff and good news on the industrial, right?
Yeah, I know, right? And a lot of people don't realize just how different bulk load transport is from the rest of the freight
it's
market.
Completely different. I mean, you think maritime's different than trucking.
Yeah. Actually, it's probably more similar to trucking than the bulk load side. You're talking
absolutely.
about hoppers and things like that where they can, and tankers that they can offload with hoses. Versus pallets,
absolutely,
loaded stuff.
Yeah, right. I mean, it's. I've got X amount to move, and you figure out how many pieces of equipment to take, right? Kind of thing. So very good stuff. Let's switch gears here and go into ocean a little bit. And let's talk to. Joining us now is Steve Ferreira, who is CEO at Ocean Audit. Hey, Boomer, what's going on?
Hey, Michael. It's great to be here with the team. Thank you so much for having me.
Absolutely. I'm joined here by Zach Strickland, our Director of Freight Market Research as well. So,
hello.
Excellent. So, let's get into it. Ocean Audit. What is Ocean Audit? What are you seeing on the ocean right now?
Sure. Just a little bit of background for the audience that those few that don't know me. I'm Steve Ferreira, CEO of Ocean Audit. Ocean Audit's been around for about 25 years. As a standalone ocean freight refund recovery firm, and right now as a solopreneur, meaning I have just one employee, me, and a bunch of virtual folks around the world. We have 17 of the Fortune 100. So it's great to be able to get post-COVID cash back to retailers, industrial automation companies, chemical importers and exporters. So any space that ships ocean, the invoice quality of the ocean freight industry is very poor. 12 to 13% of ocean invoices are defective, and Ocean Audit identifies those revenue recovery opportunities. So that's a little bit about Ocean. And I got to tell you, Michael, though, it's one thing to introduce myself, but my first slide that I did for you guys, it's a doozy. I don't know if they have a chance to put it up yet.
Oh, I don't know if they do or not.
One? Can you put up the other one first, please?
Yeah.
It's not all dooner and gloom.
Very nice.
And yeah, sorry for the little mix-up in the program there, but I wanted to talk about imports first. So
yeah, let's do that.
Why it's not all dooner and gloom is that the numbers from Asia actually look pretty good. You know, I got into my Ocean Audit real-time data this morning, and if you look at the numbers on the left, this is representing July 1 to July 26th, 2019 versus 2020. And you can see the 2020 is just down slightly, whereas Vietnam is for the same period is way up, and the total imports into the U.S., pardon me, are only down about 10%. You hear a lot of gloom and doom about, 25% down in Miami, 28% down in Charleston, but overall it's not that bad. And the August is still looking strong. I think where the issues may be are forward orders in September, which is a little bit difficult to predict right now. But I got to tell you, these numbers look very, very good. I mean, look at the Vietnam number; it's way up.
Yeah, that's we were looking at Vietnam when we introduced 7.0, and we've got the new Ocean dashboard in there that shows bookings, and Vietnam was showing very, very strong growth.
Yeah, and we were seeing Vietnam start to grow last year, were we not, Steve?
We were. Once we had the chance for a lot of the multinationals to get a jump on because they have more deep pockets to do some offshoring and move their tooling over to Vietnam, it definitely was a big catapult for them to start moving up. On the flip side, this is representing falling off a cliff. I think that I talked to a couple of really close folks in the industry on the carrier side last week, and a lot of this has to do with the fact that China has more prohibitions on scrap metal and paper, and even just transshipping scrap through a Chinese port, according to the legal side of things, seems to be prohibited. So I think it's really touched a nerve on a lot of, as you know, America's leading exports are scrap metal and waste paper and scrap cardboard and of that ilk. So these numbers are phenomenally horrible. And I think what the media does is they talk about the first trade deal with Trump and President Xi on the ag, and the ag just can't make up these kind of losses. And the Chinese, simply aren't buying the ag in the quantities that we expected. So the problem is that when we have robust ships coming on inbound, and the fine balancing act on the carriers holding back space or blanking sailings, as it's known, you have to have a way to rebalance the equipment back to Asia. So a lot of the ships are sailing back with just empties, right? And so what's looking at an attractive inbound head haul move from Asia to the U.S. turns out to be not so attractive because you've got to replenish those containers overseas. And instead of sailing with loads from U.S. to Asia, you're sailing half empty.
Would you say that some of this imbalance has led to the expansion of the rates as well as obviously the capacity that we saw come offline?
Well, this is like when I was a kid, my cousin had this Betty Crocker easy bake oven. And, you would put all the ingredients in, and this light bulb would light up the cake. And, you accomplished step 1, 2, 3, and you made this little cake in this little oven. I think this is a lot like that easy bake oven, is the fact that you had extreme demand to the West Coast, less demand to the East Coast. Forward planning orders are just all up in the air in terms of what's going out ag-wise. And the scrap metal people and the scrap people are selling the product domestically. So it's kind of like this witch's brew that went into my cousin's oven, in the sense that, you saw the Shanghai spot rate indexes drop a little bit. Now it's down to 2,700 to the West Coast and 3,200 to the East Coast. That's really actually extraordinary. Normally that East Coast West Coast gap is at least $1,000. So it shows us that the demand is still there to the West Coast. The problem is, because of the quicker turn time on the equipment, it's going to be more difficult, as I said in my earlier remarks, for the carriers to turn back a backhaul load that's a revenue producing load. So, you think about the great efforts that the carriers had. Wow, $3,000 to the West Coast. But the bottom line is that box doesn't produce that much profit overall when you take into consideration the full trip.
Yeah, the round trip, it's coming back empty.
Yep.
Yeah, that's not. So where do you see rates going in the next few weeks, month?
Yes, so this is where they pay me the big bucks. Although I'm not a consultant, I'm an ocean auditor, and I get revenue recoveries. But my take on it is that I think the fact that we're seeing some softness in what we consider back to Black Friday items and back to school and Christmas items does tend to look at a little bit more dooner and gloom for the next couple of months. Now, what's going to happen there, though, is that the carriers are in this blank sailing mode, and now they've let some capacity back on the market, right? Because you recall my earlier remarks that there is some strength right now out of Vietnam, out of China. But I think what will happen is you will see maybe a rebalancing and a withdrawing of some capacity to try to artificially get those rates up. We've already seen that with some general rate increases that have been announced for later on in the fall. So I would say right now we're holding steady at about 2,700 to the West Coast, 3,250 to the East Coast. Pardon me. I would think that we would actually see those rates pretty much not model plus or minus 5% either way. So I think we're going to be in a pretty narrow bandwidth for a while because of the algorithmic exercises the carriers use to mitigate capacity.
Yeah, right. So, you talked about how, we're very out of balance with China in terms of getting freight back to them. So why is China not buying our agricultural products?
The orders just are not there. I mean, it's all bluster, as my friend Lorianne Larocco, that you guys know and love, talks about, is that it's very tough for the politicos to really get China to hone in on our ag. A good case in point is that instead of our soybeans, they're buying the Brazilian variety. So it's my opinion, and probably another million or so other opinions, that I think the Chinese are waiting to see what the results of our November elections bring, and to see how that will change the landscape in terms of the scope of their trade. However, it is interesting to note that I had a friend last night send me a note about some infrastructure in China. I believe the Three Gorges Dam may not be doing too well. And I mean, if there could be some natural events other than COVID and maybe the chance that this dam breaks or there's some flooding, I don't know too much about this dam, but I think we have to keep our eye on infrastructure in China. And the Chinese, of course, have their One Belt, One Road initiative, where they're keeping their eye on building new infrastructure. But remember, there is old infrastructure in China that we also need to keep an eye on. And that could be an important backstory as we go forward.
Very, very interesting. Very interesting.
Three Gorges Dam is something else. I watched a documentary on it one time.
Yeah, it is. I don't know much about it except that it's amazing.
Well, it's a real slippery slope. Pardon the pun. I mean, I think that I don't know the veracity of this information. It's just like this, Trump's doctor in how do you say that drug? Hydrochloroquine.
Hydroxychloroquine or something like that. Is that what it is?
Yeah, I mean, there's something out on Facebook that says that's the way to go, and I think Trump forwarded it. So this is one of these new pieces of information we're just now hearing on China, and this particular dam may or may not be doing too well in terms of infrastructure. So we'll have to keep an eye on that.
Excellent. Hey, thank you so much, Steve. So how do people find you? Where do they see you?
Sure.
Where do they see your show?
Yeah, the easiest way is I have a regular LinkedIn live show. I'm a LinkedIn live broadcaster under the OK Boomer title, and you can find me on LinkedIn at Steve A. Ferreira. and of course, oceanaudit.com. And so thank you so much for the time today, guys.
Absolutely. Thank you for the insight, Steve. Take care.
Cheers.
Interesting perspectives.
Yeah, I mean, obviously we're going to have. It boils down to that geopolitical situation with imports, continuously with China, and obviously we're entering the election.
Yeah, absolutely.
Season.
Yeah. Well, yeah. Election years.
It's interesting for me to see it play out both domestically and internationally. Now we have such a connection to international imports, exports, et cetera, and how everybody's so connected right now. I mean, even if you are a domestic freight hauler, you have to be paying attention to these type of things.
Yeah.
Because that's going to impact you down the line, just like we were looking at imports, looking like they're starting to slow down a little bit, potentially coming forward.
Yeah, absolutely. Absolutely. So, we've got about 4 minutes left here. So, hey, coming up in August is FreightWaves and Seat My Trucks are excited to present the Carrier Summit on recruiting, retention, regulation, operational efficiency, and maintenance. Expect to hear from trailblazing trucking pioneers who have impacted the way we do business today and the way we will do it tomorrow. Get the latest update on how truckload carriers are adapting to the new world we live in. You'll hear about driver management and training in a remote working environment, recruiting, minimizing turnover strategies, M&A activity, and reducing downtime efforts. The 1.5-day event will be structured into 3 primary blocks: driver management, operational efficiency, and maintenance. And as always, the FreightWaves virtual events attendance is free and there's no pre-registration required. Come ready to learn from the best and experience what the future of truckload industry has to offer. I'm looking forward to it.
Yeah,
it's going to be awesome.
That's a lot.
Yeah, it's a bunch of stuff. In a day and a half.
A day and a half of stuff.
But it is action-packed. And if you'd missed the 3PL Summit, which was a virtual event as well, was action-packed, you can rewatch that at live.freightwaves.com or on audio by looking up Freightcasts on any of your favorite podcasts. What have we got here? Freight forecasting. I'm going to have Tom Curie, Senior Vice President of Strategy and Innovation at Kingsgate, on later today at 4 o'clock.
Yeah, that'll be a fascinating one.
Yeah, it'll be a good one.
Yeah, I mean, just to see how some of these use cases for some of the sonar data that obviously,
absolutely.
Obviously, we have our own perspective, but again, we're looking at it from the inside, trying to apply it out, and to hear some of these people that are in the world.
Yeah, I'd like to get some of our customers, our clients involved, Sonar involved on freight forecasting, so that people can hear how others are using this type, best practices type of thing.
Yeah, because there's so many. I mean, you can look at data from so many different perspectives in so many different ways, and to hear, I learn stuff all the time from our customers.
Oh, absolutely. Yeah, because they're all, one's a broker, this other one's a broker, but completely different. Yeah. They're in different verticals, they have different customers, they have different internal workings, et cetera. Yeah, really, really interesting stuff. Friday on What the Truck, we will have, Dooner and myself are not talking about doom and gloom, but we'll be talking about the rise of warehousing automation and why it's a leading space for innovation, how BCB Transport is helping drivers in the time of COVID. A trucker shares their story of finding lost money at a rest stop, and we have an orchestral play it forward. Yeah.
I don't even know what that means.
Yeah. No, I heard, Verde's going to be on.
Okay.
No, but we're joined by Vince Martinelli, head of project and marketing at Right Hand Robotics, Rick Larton, who's president at BCB Transport, Jake Semba, consulting. He's a consulting summer analyst and Carrier Direct, and trucker Charla Grimm.
I look forward. I always like hearing from the truckers.
Oh, yeah, absolutely, absolutely.
The people that are on the ground. I mean, that's some of my favorites.
No doubt about it. And then yesterday, I put that coffee down. Toby Howell of the Morning Brew, right, was talking all about social media for brands and selling through social media. If you missed that one, you need to look at it. And if you've missed any of the shows, check them out on demand at FreightWaves TV app. Or on your favorite podcast player, or subscribe to Freightcasts and get every single FreightWaves podcast all on one feed. That feed is also exclusive to Audio Home to the Midday Market Update, which, Zach, thank you so much for being with me today.
Yeah.
I hope you enjoyed it.
It felt good. I'm glad I could fill in for our guy, Kevin.
Right on. You can find all these episodes on FreightWaves TV and a podcast by looking up Freight Forecast or Freightcasts on your favorite podcast. Go to tv.freightwaves.com and subscribe today. I'm Michael Vincent. Thanks for watching. I'll see you guys at 4. Peace and love, everyone.